Hello, Jonathan. Welcome. It's a pleasure to have you here. How are you today?
Yeah, I'm doing great. Thank you for having me.
Great. Would you like to give us a short introduction of you about NinjaPay?
Yeah, happy to. Thanks. I'm a payments nerd. I've been in payment space almost my whole career, except the 6-month internship on Wall Street. I started in the payment space in 2011 at Royal Bank of
Hmm.
Scotland. Did a year there. Was fortunate enough to join the Adyen back in 2012
Hmm.
when we were about 100 people globally. So did
Wow.
3 years here in Amsterdam, where I'm currently based, and as an account manager. Then after 3 years, they moved me to San Francisco, and we started growing quite rapidly out of the Silicon Valley in 2014, and that's around the time we brought on Cameron Saki to lead the North
Mhm.
America. And I spent 3 years managing account management team out of San Francisco, working with all the big guys, Microsoft, Facebook, Netflix, etc. And after 3 years, averaging around 60 flights a year, traveling the world, I took more of an IC role and managed the eBay migration off of PayPal and
Hmm.
onto Adyen for platform. So I led the internal team that was supporting eBay for about 2.5 years, and then decided to leave Adyen beginning of 21. It
Mhm.
was of course COVID related. Being sitting in front of the laptop like this wasn't the same as being in the office.
Yeah.
And then Adyen was about 2,000 people then. So after 8.5
Wow.
years, it was a different company. I think 2012 we did about 10 billion in volume. When I left
Mhm.
in 2020, they did about 360 billion.
Wow.
I think now last year they did about 1.3 trillion or something. So of course grown quite rapidly. So
That's
then
that's a great experience to to start with, you know?
yeah, no, really. I mean, I didn't realize how much I learned during that
No.
time until I left and started consulting, because that's really when
Mm.
you started realizing the amount of wealth of knowledge that you absorbed. And I
Yeah.
mean, I was so fortunate to work with some of the amazing both founders, but also late leaders that Adyen brought
Mm.
on, from Roland Prince, Ingo, who's now the CEO, Kamran, Saki, Sam Halls, and of
Mhm.
course the technical guys, Etienne, Michiel, Toneman. And it was just a fantastic experience. And then
Yeah.
consulted for about 3 years, 3.5 years, mainly in the US and California. And then about a year ago, moved back to Amsterdam.
Mhm.
I'm born and raised in Sweden, but Amsterdam is near and dear to my heart. So been here now for about a year. And when I moved here, I got contacted on LinkedIn by a entrepreneur, developer, young guy from Nigeria, living in the Netherlands, wanting to build Ideal for Nigeria, because
Mhm.
online banking was not payment method wise was not really a thing, or is not really a thing. It's all manual bank transfers in
Mhm.
Nigeria. And started advising him go to market strategy, payments, and getting him ready for investment. And during that, I was introduced to the founder and CEO of Talk 360, which is an
Mm.
international calling app focused on Africa, the African migrants and diasporas. And I really wanted to just understand what they were doing in Africa, what challenges they were seeing, and what they had built on the payment side. And little did I know that they were looking for a business leader for
Mm.
their spin-off, which is NinjaPay. And at first, I was not convinced, because I came with my Western mindset, and I thought to myself, Flutterwave, it's a $3 billion company. Paystack was bought by Stripe for 300 million. Like, these guys got to be able to solve the problems, right?
Mhm.
And he convinced me to come on board and consult for them, see the problem and the challenges firsthand. So I did. I was working for an American client at the time, So I had some time during the day and did 2 to 3 days a week. And then after 2 to 3 weeks, I understood it. Like, these guys are great on one market, but if you like Talk 360 is operating in multiple market, they cannot cover it all. So Talk 360 had to integrate with 6 PSPs. And it's a small company, less than 30 people globally, and they don't have a payments product manager. So I understood the challenge and I saw the opportunity firsthand, and that's when I said that okay, I'm on board. Find me a CPTO, a CTO, a technical co-founder, and technical partner in crime because I'm not technical. And that's when we found Roderick in October. That he came on board in December, and it was off to the races.
Nice. I think it's a wonderful experience. I mean, you went all in with the payment experience from the beginning. You saw the growing of multi-billion-dollar companies going from 100 to 2,000 employees. So it's kind of an amazing experience. But I would like to start from your perspective on one of the last point that you made. So I was recently talking with another company that is trying to assess the problem of cross-border payments and overall payments in certain kind of markets, like for example Africa, but also South America. Uh, they were using, for example, stablecoin under that point of view, but there are multiple companies at the moment that are trying to solve the problem of payments internationally and cross-border payments in different directions. So I wanted to have your take before we go back to your experience. I wanted to have your take on this matter. So first of all, why is so complex to handle payments internationally like that? And second point, how can someone solve it? Because it seems kind of easier than it actually is, because it's kind of very, very hard to solve this problem.
Yeah. First is regulation. I think if you take the European Union, it's quite unique because we cover the regulatory landscape across multiple countries. But of course, each country in of itself also has specific regulations, and that becomes even more trickier if you look at a continent like Africa or Latin America, where they don't really have the same union and the same strict guidelines. And then secondly, it's money. And when you talk about money, things become a lot more challenging, and as it should be, right? Because it is
Yeah.
actually both from a anti-money laundering perspective and also from a security perspective. I want to know if I buy something online, it's secure, it's safe, it's reliable, and I am paying somebody or I'm sending funds to someone, that the funds will actually arrive. And this is also why I think not really stablecoin, but crypto. And one of the challenges that, of course, stablecoin is trying to solve is if you buy with crypto online, the value will not depreciate based on the tweet or any of that. So
Yeah.
I think that's to answer your question. Those are the two main reasons why it is a lot harder than you realize.
Probably, if I can, sorry to interrupt, if I can add the third one, I will
Yeah.
also add data and information, because something that I've noticed recently, it has always been a problem, of course, but something that I've noticed recently that is that become easier to actually steal the data, the personal data of the person from the payment itself, and then actually basically push the person into a nightmare of proving who it actually is.
Yes.
And that is a problem worldwide. Like, for example, in Europe, we are trying to solve this problem with ADAS 2.0 and with digital identity, but we are still not in that position, we still have a lot of problem. And when you make payment is one of the most sensible moment when you can actually have your data stolen.
Exactly. And of course, you want to make sure that that data is secure. And especially in today's world with the fraudsters being extremely sophisticated. So, no, a good third point.
Yeah, I totally agree. And coming back to your answer, so that is one of the problems. So what about the solution? So how do you actually think we are going to solve something like that? Because I'm having that conversation with multiple startups in multiple countries, and everyone seems to have their secret sauce, you know. So someone is doing that with stablecoins, someone is doing that multi-platform, you know, trying to centralize everything. So how do you actually do that? How do you actually solve this problem?
Yeah, that's the billion-dollar question,
Yeah.
right? No, I think there are a number of companies that are trying to solve it today or have great products from
Mm-hmm.
Wise that I'm a user of and love their services, transferring money from one country to the other,
Mm-hmm.
being international myself, to the likes of a yellow card in Africa that is really trying to leverage stable coins to transfer money in and out of various countries. Um, but and I think it will be a challenge for the next 5, 10 plus years that until we uh, figure out one solution, which I honestly don't know if we in our lifetime will ever see, because I do think that it is one of these problems, challenges that is difficult for a reason. And I think every
Mm-hmm.
country wants to protect their currency. I mean, it's one of the fears that we're seeing, or the risk that I'm seeing these days around all the countries around the world becoming not global anymore. They are more
Mm-hmm.
focusing on onshoring and protecting their own interest, which of course will make some of these things even harder going
Yeah.
forward than easier. But I truly believe that stable coins or e-coins or money will be the future, and I do believe blockchain will play an important part in that. Who or what or how, there are smarter people than I that are trying to solve it, so I will let them come up with a solution.
Yeah, no, it's a good point. But let's go back to the to your experience. So, uh, before we jump to the last fundraiser that you closed, I wanted to deep dive a little bit on the first part of your experience. So, how actually was to see Adyen growing from 100 employees to 2,000 people in less than 3 years?
Uh, Amazing is the short answer. And I mean, one, you heard some of the more experienced leaders in the company saying that what we're building now is unique. And I think
Mm-hmm.
you truly didn't realize it until you were out of the Adyen bubble and the experience that how of a unique platform and also a unique company and a group of extremely talented, ambitious, smart, genuine, honest people we were fortunate to work with. And of course, the founders, they had the strategy laid out pretty clear, but we
Mm-hmm.
were also at the same time willing to innovate and willing to pivot when needed to. I mean, from the likes of Groupon in the early days, where we were helping them expand internationally, um, to working with Facebook in the early days and Uber as well. Like
Mm-hmm.
we were able to launch new market with Uber within weeks, and that speed and that part of the innovation was incredible. Like we we used to have the saying, "There's no problems, there's only challenges," and
Mm-hmm.
if we can solve it, then let's figure out a way to solve it. And the I mean, I was hooked pretty early on, and the best description which for I would probably say the first or the 5, 6 years within the company. Of course, when we went public, it changed slightly, but the first 5, 6 years, it was like that, where you were able to make decisions. You didn't need to get any big product request approved
Mm-hmm.
by management that would take you months. It was literally, you had a problem, you went to speak with the relevant stakeholders, be it compliance, be it engineering, um, and then you discussed it with your direct manager. Maybe you discussed it with the management team or one management team member, and then they would discuss it internally if it was big enough from a contractual negotiation
Mm-hmm.
standpoint to a product enhancement. And within a week, you would have a decision. And then if it was something, we would say go, the engineering team would start working on it. So you could go back to a Netflix and say that you had a solution within less than a month. And of course, for these companies that were innovating as fast as we were, it was a partner that they had not experienced before because they were used to the legacy guys like Chase, WorldPay, Global Payments, Fiserv, that would take years to build certain things that we could build within weeks or months. So that, of course, helped significantly. It made my life easier as the account manager to some of these companies, but also it really helped us grow and it really helped us push boundaries, which, of course, then just helped us getting more and more volume on board.
Yeah, I think that it's not just the speed, but it's actually, as you described, the flexibility of being able, to take your own choices, involve the right people, not being constrained by endless meeting or endless processes. That kind of flexibility, that kind of speed really helps when you are dealing with challenging customers or at least very competitive customers. So yeah,
Exactly.
yeah.
And I mean, when I joined early on, we won Spotify. They ended up going with us, and I still remember getting a question to them from them, and I went to Sam Halls, who was my direct manager then, and I explained the situation to him, and he told me to go and talk to the head of engineering and the head of technical support, get their opinion. So I did, and they said we can solve it. This is what we need to do. I was like, okay. Went back to Sam, and he said, yeah, makes sense. Just do it.
Just do
And,
it.
and then within a week, we had the product live for Spotify, and it solved a significant problem for
Yeah.
them. So of course, they saw us as a true partner, and that's really how we positioned ourselves as well with these guys. We didn't want to become a new vendor or anything. We wanted to be their partner who, to your point, were flexible, listening to their needs, and did not just innovate because we came up with a cool product. Yes, we launched products because we wanted to go in that direction. Omnichannel being a perfect example. We launched this little shuttle that was, in all honesty, a terrible product experience for our merchants, but it gave us the opportunity to learn and innovate. And then you realize, okay, we actually, if we want to go into true omnichannel and go after the enterprise merchants, one, we need somebody with the expertise. So they brought on Sean Mark from Verifone Ingenico experience to build out the whole operations around omnichannel and point of sale, and then building that more strategic relationship with Verifone and using their terminals. And that was really, without that shuttle experience, it would have probably taken them a little longer to figure out how do we actually build out this point of sale offering that we know we want to take the company into.
So you've been mentioning this point a couple of times, like the ability for certain kind of startups, in this case for Adyen, but it's the same case for other tech startups, to actually bring in people with a lot of experience, with a lot of knowledge in the industry. So how much important do you think it was for Adyen in that case, but in general for fintech startups to grow, to be able to involve leaders like them? They can either be hiring people out there or even having someone as a strategic advisor that steps in and says, okay, this is kind of my experience in that realm and I can help you out. So how much important do you think it is?
I think it's invaluable to bring in both with the right experience and knowledge of what you want to build. Because even if I have roughly 15 years of experience in payments, I would be arrogant to think that I know everything. And for me, one of the great part about my job is, one, I have an experienced chairman who have run number of startups and have experience with running a business in Africa. that I can rely on, but then also having the ability to bring on board Tristan, who's the CEO of Uber Payments here in Europe, as a strategic advisor that I can get some advice on around being a first-time CEO, and also having spent times at Barclays, Visa, Amex. So from a payments perspective, he knows things that I don't. And then also having some strategic advisors down in South Africa, because in the end, African payments is slightly different. And I think Adyen was, of course, slightly unique where they had built a payments gateway. So they knew how to build a payments company from the ground up. But at the same time, they were also able to bring on board folks like Cameron Saki, who came from the US, PayPal and Netflix, Paul Cook, who came from Visa on the acquiring side once we started to grow that, and Sean Mark, etc. So I think anyone who thinks that I can do it all by myself is naive, and I think it's the less than 1% who are actually able to do it. Of course, there are those outliers who are extremely talented, but yeah, I would advise anyone to make sure you have one or two mentors, advisors, and or colleagues, team members, when you're trying to build a company.
Yeah, no, so it's a very valid point, to be honest. So let's go back to the current experience. So you said you weren't convinced in the beginning, then you jump on it. Then you recently closed the first funding round. Uh, first of all, how was it? Because this is one of the question that I always ask to founders or to startups. So
Yeah,
how hard it was to close the fundraise this time? Because every time that I ask that question, the economic period shift a little bit. So sometimes I get an answer like, "Oh yeah, it was easy. It was like 2 months of work." Sometimes I get, "Oh my God, it was a nightmare. 2 years to
yeah.
close this funding round." So it strongly depends. So how was it this time?
I would say I'm probably in the middle somewhere.
Okay,
I
that's
think,
good.
yeah. One, we had, of course, some traction being a spin-off. Being a spin-off has both its challenges and its pros. And I'm more than happy to share both. But I mean, we spoke to about 40 different VCs probably in the span of 2 months time. And I mean, there were one day where we had 4 meetings in a row, and the first meeting was supposed to be a half hour. It was an hour. The second meeting was supposed to be an hour. It turned into 1.5 hours. So sort of the one thing I didn't realize is how you had to be, of course, on your toes, because you were in the sense selling to these VCs, and they are bombarding you with extremely smart questions, most of them, and you had to be engaged. So it was tiring in that sense, and time consuming. Again, if you're a first-time founder, you're racing for the first time, make sure you have somebody in your corner that could tell you the do's and don'ts, and simple things that, again, the chairman of the board and the founder of, and CEO of Talk 360, Hans, that he said early on is when we started getting these follow-up questions from the VCs, he said, make sure we keep track on them, like the question and the answer. So we started keeping a sheet of all the questions and answers. So when we had VCs interested to start doing more due diligence on us, we already had a slight little data room that we were starting to build up. Then you started getting these questions around tractions, MOUs, financial forecast and everything. And as you started building out and answering these questions, it became easier and easier as time went on. And then we were, again, pretty fortunate being a spin-off to have the lead investor of Talk 360 seeing the opportunity, and we did get an offer on the table that we thought was pretty good. And when we presented that to the board, they actually said, you know what, we truly believe in this opportunity, and we're willing to put in the money to give both companies a better offer, basically. Because the one thing you never really hear about a lot in the world of VCs is, of course, what are the term sheets? You might get a great offer, monetary values, but that the terms might not be as appealing. Which is, again, one of the learnings that I did was learning about things like liquidation preferences, which is why you see these companies being sold for 1 billion and the founder is left with maybe 1 million or 2.
Maybe.
Yeah. So, no, so that's my one advice. And the one thing I was truly grateful for during the 3-4 month process, because that's roughly what it took us, is make sure you have somebody that you can be 100% honest and open, that knows your situation, that have your back and your best interest at heart, that you can share some of the both the struggles and the opportunities with, and always give yourself, I mean, the 3 to 6 months is really very accurate. So you never want to expect that the good old 2020 or 21 times where that 2 months period is happening right now.
When people were throwing money at you on the street, yeah, it was a good period. No, yeah, I strongly agree on the last one. What I usually advise startup to do is always to take in consideration 6 to 9 months to close a round.
Smart.
Mostly if you start from zero, mostly in Europe, where things are a little bit different, for example, from the US. There are always exceptions, of course. There are very good investors out there that are very responsive, that when they see an opportunity, they jump on it and that's it. But there are also others that are not that responsive, that take a lot of time, sometimes also waste a lot of time. So, you never know what you find.
No.
But yeah, I think that overall was a very good opportunity. When you raised, you were already on the market, so you already had traction, like numbers, KPI. You already had revenue, for example, or you were pre-revenue, pre-product, something?
No. So we had some revenue volume on the platform, so it was not sort of an untested MVP. So we were live and everything, and I think the biggest question that we were always getting is, well, what is the traction that you guys are seeing? We understand the team, the experience, the challenge, and now we just want to make sure that that is being validated, which is also what we heard quite consistently from the more seed Series A investors that we were talking with as well. They all said, like, we love it. We're very interested. It's too early for us, so make sure you guys onboard another 10 plus customers, and we would be very interested. So I think, again, most of the smart money will want to see traction this day, especially if you are an unproven founder, first-time founder. Then it's even more important to show that we have traction, we have paying customers, and right now we need the money in order to grow. That's why we need the funds. We're not racing in order to build what we think is a cool product. And of course, as I'm working with some of the younger founders, first-time founders that think that they have a great idea, that's the one thing I'm always telling them as well, that investors these days, they want to see more than just a great idea. They really want to see that you can build a business and that it has been validated by the market.
Yeah, that's a good advice, and it's mostly also very realistic on the with the today's environment. Also because it's, as you said before, it's not 2020 or 2021 anymore. There's no free money in the market at the moment. You need to bring good business to the table in order to have a good amount of capital, mostly in Europe. Still, in certain part of the US, I think it's still possible to sell a vision or an idea, because the kind of appetite from the investors is a little bit different. There's a very different risk capital market. Sorry, but here we need to sell a business first. But let's talk a little bit about the market itself. So Something that I've always thought about the African ecosystem, that by the way is one of the most interesting out there, at least under the fintech point of view, is the kind of leapfrog that we always saw in the market. So we always saw them going from a cash-based society, for example, to a digital-only payment society. We saw the same kind of argument with telecommunication. They went from zero or almost zero phone to all 4G phones in a matter of maybe months or a couple of years at max. So I wondered, how do you see that market, given the fact that you're trying to focus on that kind of market? How do you see that under that point of view? And which kind of environment did you find under the payments, of course, point of view?
Yes, I think that's one of the benefits of emerging market, right? They don't have to sort of climb the same
The legacy, the
ladder.
constraints, let's say.
Exactly. They can really learn from the more developed market what works and then implement that. But I think the biggest challenge that you're seeing in Africa right now is still some of the legacy infrastructure, and that is just too far behind. And that goes from simple things like roads, logistics to financial technology. And for me, from a payments perspective, since that's what I'm mainly focused on, is it is, 15, 20 years behind from what you're now seeing some of the more fintech focused providers here up in Europe or in the US are. And there's simple things like hosted payment pages, hosted checkout, it's heavily used. Some of the more older payment processing platforms are heavily used. So even though some of the technology is there, they are still running on more legacy infrastructure, which is where I really do believe some of the next wave of fintech companies will be coming up. Is how do you replace that, and how do you improve on the infrastructure? And of course, that goes from road, bridges, train station. I mean, if you go to some of these countries, they don't really have addresses even. The mailman knows who lives where. So you can imagine running a retail company online.
Good luck.
Exactly, it becomes almost impossible. So that's again, infrastructure wise, is the biggest challenge in Africa today.
Okay. And do you think that the kind of problem is more or less equal everywhere in Africa, or there are certain kind of countries that are a bit, let's say, a step forward? Because as far as I understood, with a couple of conversations with people, for example, from Senegal, from Nigeria, there are a couple of countries where, they are a little bit forward under that point of view. Like, for example, if I remember correctly, of course, Nigeria is almost a cashless society. They have a lot of different kind of digital payments, digital banks, very, very aware of the kind of situation. Of course, I do not know by first hand, let's say, but I wanted to understand if they are very similar, like, for example, to Europe under that point of view, where you have, let's say, for example, the Netherlands that are basically cashless, and certain countries like Italy where still, 60% of the trade is made with cash.
Yeah, so I would say in a country like Nigeria, you have indeed the cashless society amongst some of the demographic that really prefers to pay everything online with cards because of the providers make it available. But then you still have the demographic, the society, part of society that will maybe get their paycheck into a bank account and then will go to a money point and take out the money because they prefer the physical cash. But the country itself is able to facilitate the cashless society. The providers in the market have really built out that ecosystem where you don't need cash because you have the money points of the world facilitating those digital payments. It's more the certain demographic prefers paying with cash, and that's same honestly across the continent, where you do have, of course, M-Pesa, for example, in Kenya, that really was on the forefront of mobile wallets and mobile money before it was even a thing with Apple Pay. And they have also, themselves, Safaricom, have not continued to innovate at the same speed. So now they are sort of lacking behind, and then you start seeing Wave in Senegal, and that market is now booming and really growing rapidly. So I would say, as a continent, each country is slightly different. You cannot ever expect that it is similar to Europe, where the two neighboring countries might have similar preferences.
Culture,
Exactly. But you still, I mean, well, honestly, let's look at the Netherlands and Belgium. I mean, Belgium has Mr. Cash, the Netherlands have Ideal. Now, of course, the European Union is pushing Vero and sort of consolidating all of the online banking payment methods.
They already acquired Ideal, if I remember correctly.
Correct. Yeah, and Payconic. So they are, of course, trying to build it out, and that's where, again, Europe is slightly ahead, because if you then look at Africa, Airtel, which is one of the larger telecommunication providers, and MTN, etc., they are not everywhere in Africa, and even if they are, their solution may not work seamless country by country. So that's the nuance, because in Africa, each of the countries, and that's a big challenge, you really need to localize your offering in order to have a great solution for the companies and for the end user as well.
Yeah, makes a lot of sense if you think about it, because they're not a union of states or a community of states. They're just a continent made of different culture and different people. So it makes sense that they have very different, uses at the payments point of view, of course. Maybe let's just jump back to Europe to talk about a little bit about the fintech market itself here. So you obviously have a lot of experience in this field, and we are seeing a lot of improvements and different kind of changes, or even more recently, stable coins are one of them, but we have digital banking taking place all over the place. We have PSD3 that is trying to affect the open banking market and the finance market. So I wanted to understand your point of view on the market right now. So we are coming out of two of maybe the worst years in the fintech market overall. We are trying to recover from that. But I wanted to understand, how do you see the market now, and which are the main trends that you're following right now, and which potentially are the trends to follow in the future under your point of view?
Yeah, all good questions. I'm still a strong believer of that the current providers in the market will be the dominant one. I am not following the stable coins or the crypto landscape on a daily or weekly basis. Of course, trying to stay up to date and really start seeing when does it start becoming more adaptive in Europe. And I don't think you will see a large adoption until the regulatory body in Europe will start pushing it, or the country will start pushing an e-currency of that sense. I was at an investor event early in the year, and I got the same question, and I said, who here has ever paid with stable coin or crypto in that sense? And out of 60 investors, 0 raised their hands. But I do think, again, coming back to this sort of onshoring mentality that has been forced upon us by one man, is making the European Union realize, and I know that it was mentioned that, hey, do we actually need to think about building out our own sort of rail that we control now, that we are not relying upon a country or one provider. And I think that is going to be interesting to follow, to see, is that just a dream, a claim, or will they actually start working on it? I think, again, I am curious to see how Vero will take off, because I do think if they're able to build it from a user-friendly and product perspective, and start getting adoption of all of the providers out there, because that's, again, the biggest challenge for a payment method like that. In order to reach economy of scale, you really need to get all of the providers bought in and integrated and then offering it. But of course, that's something I'm interested in. I'm always interested in security, honestly. How do you make sure that, coming back to your earlier point, keep payments secure while you're not eliminating the user ability to pay seamlessly? For me, that's always top of mind. And then lastly, I think one thing I'm excited about is blockchain. How can blockchain help with that? Because I think the technology is there, and I know it always gets forgotten about. It's the same now with AI. Sort of everybody's throwing out the word AI, but nobody is the wrong term, but not a lot of people understand what it actually means and the underlying technology and how that could also help fight fraud and improve product and the usability. So I think blockchain AI, that's definitely something I'm paying close attention to, and seeing how that will impact the payments landscape or the fintech landscape. And then from a more product standpoint, of course, embedded finance is something I always get a lot of questions about from people. When is this coming? How important is it? How big of an opportunity is it?
We are still waiting for pay by bank. That would have been a very, very interesting thing, in my opinion.
Yeah, exactly. And I think, again, open banking is one of these that I'm wondering if Vero will be the same. Open banking was talk about for forever, that it's going to revolutionize the way people buy. Again, don't get me wrong, it's a great product, and it helps streamline certain operations online, but it's more of a B2B proposition in that sense. So
I agree, bro. So maybe
what about yourself? Let me turn the question back to you. What?
I have a couple of trends that I'm following. To be honest, like, I'm very, very curious about stablecoin in payments, because I'm collaborating with a couple of startups that are trying to do something under that point of view. And in my opinion, it's very interesting what they're able to do. Cross-border payments is one of the, not trend, but at least vertical, that will surely be impacted in the upcoming two years, let's say. So that, in my opinion, is going to happen. I am still waiting for someone to actually bring a real super app, financial super app in Europe, because I really want to see that. I think that Revolut is trying. Not sure if they are going into exactly that direction, but at least they're trying to offer as many financial services as possible. But a real financial super app, something like WeChat, WePay, or Kakao Talk in South Korea, in Europe, I would love to see it. I'm not sure if it will ever happen. Those are mostly the one that I'm following. But I'm very, very curious, to be honest, about one point that you mentioned right now, that was where overall, if we actually need to build our own provider, because one of the most recent topic under that point of view is the fact that we are highly dependent from a payment perspective on Visa and MasterCard. That is a fact. We cannot say anything else about it. And there's this discussion going over about the fact of Europe having its own payment provider, its own payment infrastructure, without being necessarily, obligated to actually use something that has been built outside. So I wanted to understand if in your opinion, this is something that we need to do? And most importantly, this is actually something that we can do, because doing that and actually having that working, it's two different things.
Uh, I'll say what one mentor of mine always said, technically it's possible.
Yeah.
Getting the European Union to do it, I think will be slightly harder.
Yeah.
From a security perspective, it would be nice to have
Mhm.
the rails controlled and run by Europe. I never thought we would be where we would actually think that we could not
Mhm.
rely on a Visa and MasterCard.
Yeah.
So I would say technically it's absolutely possible, but I think it's easier said than done
Yeah.
because you talk about interchange, talk about revenue sharing with, I don't know how many European banks, and then getting the rails built as well, it will take a long time. I mean,
Yeah.
if you just think about Adyen, which is a payment service provider, and payments company and processor and acquirer, they spent about 2 years to building out their platform before they went
Mm.
live. It's crazy to think that they actually are turning 20 years
Yeah.
next year. And of course, if you are going to build out the whole network in of itself, investment. But again, if you think long term, and I loved what you were saying about the European super app, because I think that would be a fantastic foundation for an app
Mhm.
like that to run on. And with the technology available today, it could indeed be possible. But
Mhm.
I think the challenge there will be the regulatory bodies and the politicians to agree on investing in it. And then second to that would be to get all the banks to, of course, then adopt it.
Yeah.
And because in the end, you don't have to give up Visa and MasterCard. All you got to do is make it a
Only having an
co-branded.
alternative,
Yeah.
because right now it's actually mandatory for every company out there to have Visa and Mastercard, because it's kind of 90% of the market. But let's suppose that something happened tomorrow, having an alternative would be necessary. So
Yeah.
um, yeah, I think that that's a good point. I am very, very not optimistic, to be honest. But I think that there are people who are trying. Like, for example, Wero is let's say, is a step in that direction, in my opinion, or at least is a tentative to
Yeah.
have a payment method all over Europe that is acceptable and everything. And going from there to actually having a payment infrastructure could be a potential plan. Obviously, it's not easy. Obviously, it takes time and everything else, but um, at least, it's a step forward.
No, exactly.
Jonathan, it was a pleasure having you. We could have gone, I think, at least another hour, but our time is over. Thank you very much for joining. It was a very, very interesting conversation.
Thanks for having me. And we'll have to have a